in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg brief. Let's get you set up for the day. Awaiting Chair Warsh. Futures and bonds wavering now as investors seek clarity on the Fed chief's outlook and reaction function potentially. A blockbuster day. Nvidia shares at a whopping $442 billion in just one session after robust guidance. But the AI boom also raising concerns about debt financing. PIMCO saying it's too much, too fast. All right, just a few hours now, 5 in fact, before we start to hear from Fed Chair Warsh. Let's get a check on how markets around the world are awaiting that speech. We'll start in Hong Kong with Winnie Su.
Yeah, good morning, Bonnie. Happy Friday. Well, we are seeing Asian stocks edging higher for a fourth day and also headed for, in fact, its best month since May. Now, as you mentioned, all eyes are really on the Jackson Hole meeting. And today's outlier in Asian markets, though, is a Korean stocks, which is down about 1.8%, dragged down by some concerns around the impact of that back-to-back rate hike that we saw yesterday from the Bank of Korea, which is also pushing the Korean won higher today. And in fact, the Korean won is the strongest global currency so far this month. Now, on the weaker side of things when it comes to currency, you flip forward and take a look at the Japanese yen weakening for a fifth day, which is also supporting the Bank of Japan's rate hike earlier than expected. And also supporting that bet is the Tokyo CPI numbers that came through as an acceleration for a third month, as well as a weak demand from the 2-year JGB bond auction. And that is also driving yields across the curve higher. Back to you, Bonnie.
All right, a lot of movement in Asia turns out this Friday. Winnie, thank you. Winnie Su there in Hong Kong. Now let's get to London for a look at the European session with Alex Morgan. Alex.
Good morning, Bonnie. Here we are, the end of August. Green across the screen in Europe. Stocks 600 there, looking to end their fifth consecutive month in the green. The real standout this morning, though, the CAC up over 1%. Now, of course, that was weighed down yesterday, mostly by banking stocks in France and Paris over this debate regarding the future of the presidential candidates. They're having their economic to and fro yesterday. Let's turn the board over, though, and look to some of the data we've had out this morning. And inflation in both Spain and France edging higher. Spain accelerating to 4.5%. That's the highest since 2023. Of course, the broader debate in Europe is going to be all eyes to what comes out of Jackson Hole. But you can see some of this data here. France as well, inflation up, growth downgraded. Some of the headwinds on the continent. But as Winnie was saying, Bonnie, as you've been saying, all eyes to Jackson Hole.
Absolutely. Alex Morgan, thank you so much. Turns out there is a lot going on apart from Jackson Hole around the world, but that's what the US is firmly going to be focused on, that and of course the afterglow from the tech earnings, both software and Nvidia. As you can see, S&P futures not really going anywhere. Nasdaq 100 futures for the moment pointed fractionally lower, but we did have an excellent day yesterday. Let's take a look at yields, because one of the things we might be looking for is for Warsh to talk to us a little bit about his reaction function, or potentially how he's going to actually implement his plan to get inflation under control. I say his, of course it's a committee, but we know a little bit more about what the rest of those on the committee think. UBS's Paul Donovan today saying that the worst case scenario is that Warsh talks about the productivity pixie again and how we're going to grow our way out of any potential problems. Well, the bond market probably won't like that, but then again, if he doesn't talk about monetary policy at all, maybe we won't get any reaction. 2-year yield at 4.23, just a little bit higher than it was 24 hours ago. And we have the 30-year yield creeping back up again, unchanged in this session, but from where we were 24 hours ago, we're back above 5.20. All right, let's get now to this countdown to Fed Chair Warsh. Less than 5 hours before he speaks, we'll be speaking with Sitara Sundar of JPMorgan Private Bank for her thoughts on what he might actually say. Now, Chicago Fed President Austin Goolsbee staying a little cautious on inflation. Have a listen.
I need evidence that inflation, that this inflation shock is not going to be persistent. And I'm okay with waiting as we're getting that. But if the evidence starts coming back, especially on services, that it's high, it's going the wrong way, we're not making progress, then I'm going to be nervous.
It's a very, very divided committee. We've been hearing from other members, of course, that they would like to get moving more immediately, including the Kansas City Fed president. Joining us now is Bloomberg's Adam Linton. Adam, Just on the off chance, how does the market react if we only get a speech on innovation in the financial system, which would actually be hewing to the theme of the symposium?
Yeah, I think in that instance, I think the market doesn't really do anything with it. I think, there's this case of potential disappointment, but I don't think it's disappointment if he doesn't address monetary policy at all. I think in that instance, we all just kind of carry on as you were. We look towards non-farm payrolls next week. We have a CPI report before the September meeting, and the markets will probably carry some residual probability of a potential hike next month, purely on the basis it doesn't really understand the Fed's reaction function.
If Warsh communicates something about his reaction function, is there the risk that he look like he's retreating on his promise to only communicate something if he really has something to communicate? Would that make him look like a flip-flopper, Adam?
No, I don't think so. I think that'd be maybe a bit of a harsh label to draw on him. He's clearly someone who's finding his feet in this job. And I think, if anything, if the market got something more to go out of, what the Fed's reaction function is at this juncture, I think it'd be grateful. And I don't think anyone would be necessarily criticising for giving him that.
All right, Adam Linton, thank you so much for joining us this morning. That is Bloomberg's Adam Linton. The US in talks with Venezuela to take a large stake in its oil fields. Now Venezuela is considering whether it should quit OPEC. This comes as Goldman Sachs confirms what we were saying yesterday, that oil flows in the Gulf are at 2/3 of pre-war levels. Let's discuss with Bloomberg oil reporter Alaric Nightingale. Alaric, how much of a blow to OPEC would it be if Venezuela pulls out? We already had the UAE pulling out 4 months ago.
I think it would be a significant symbolic blow to OPEC. In practical terms, Venezuela is a relatively modest oil producer at the moment, and it hasn't had influence within OPEC as a producer for quite some time. But it was one of the creators of the group, and this comes not long after the United Arab Emirates left, and there were brief complaints from Iraq about its position and its right to pump more oil. So the pressure is there, and it is significant for OPEC to have such a kind of historic member potentially leaving the group.
What would be the ramifications? Venezuela already wasn't contributing all that much of its production to the output, right?
The ramifications are that you are just diminishing the group. You are giving it less collective supply, and you are just reducing its overall influence. It would probably push Saudi Arabia closer, I guess, to Russia. There is this OPEC Plus alliance now, which is dominated by the relationship between Riyadh and Moscow, and I think that would become more pertinent. But nevertheless, Russia can't produce all the oil it would like at the moment for various reasons. So, the only country within the group that's doing much more oil is going to be Saudi Arabia itself, or the one that has the flexibility to do significantly more would be Saudi Arabia. So again, it's just losing influence and whittling away the collective power that the group has over time.
Why is Venezuela considering this right now, and particularly given the amount of conversations I'm sure Venezuela and Delcy Rodriguez and all of the executives are having with President Trump? I mean, at the moment, the US may have some input actually into OPEC discussions sort of in the background, right? But if Venezuela pulls out, that diminishes.
Why is it discussing this now? I mean, it's a good question how much agency Venezuela has in this conversation.
Yeah.
There was Maduro was overthrown. It seems incredible, but just at the start of this year. And the US producers are moving in. What agency does Venezuela really have in whether it stays or doesn't stay in OPEC? So in some ways, I guess there's a somewhat moot element to this, because the country is already under significant US influence, and we know that President Trump isn't a great fan of OPEC. But nevertheless, it's still another building block, another little domino that's kind of has the potential to topple over.
On flows, Alaric, we were reporting yesterday through traders that exports out of the Persian Gulf have recovered to 2/3 of their pre-war level. Goldman now confirming that and saying actual total exits have reached 15 to 16 million barrels a day from the region, not just through the Strait, but from the region. That's a lot. Is it enough to replenish inventories and maybe bring oil down even a little more?
I think it's a big question about where it leaves global inventories. We know that there are still significant problems getting refined fuels out from the Persian Gulf. We had the CEO of Total this week saying that there were no fuels getting out. I don't think that's quite right, but there's an underlying truth in what he's saying. There is a significant problem with fuels. In terms of balances, you know, we're still well down on what was coming out of Hormuz. Other countries have boosted. We see that China still has some flexibility about what it buys. So I think it's not kind of a drastic drawdown in inventories. There's maybe a modest decline in global inventories. I don't think that the Goldman Sachs numbers are wildly different to other people's estimates. They're adding the stuff that comes out from the Red Sea, the stuff that comes out from the Gulf of Oman, and then on top of that, what we have been talking about through the Strait of Hormuz yesterday, which is kind of 7 to 8 million barrels, 6 to 8 million barrels a day through that waterway.
A lot better than it was in recent months anyway. Bloomberg's Alaric Nightingale, thank you so much for joining us today. Now to other top stories trending on the terminal this morning. Iran's foreign minister says resuming diplomacy with the US, quote, isn't impossible. The remarks come after what he described as creative discussions with Qatar. The relatively positive comments come despite the launch this week of a US campaign to cripple Iran's economy. The top US commander for the Middle East says US forces have cleared Iranian mines from the Strait of Hormuz. Admiral Brad Cooper released a video that included a detailed map and a diagram after US allies expressed doubts about the claim.
We have successfully cleared sea mines in the Strait's international shipping lanes that were laid months ago by Iran's Islamic Revolutionary Guard Corps. Bottom line, today, international shipping lanes are open and momentum is building.
And a US judge has ordered the Trump administration lift its ban on Anthropic's AI technology for federal agencies. The judge found that the ban isn't adequately justified and was based on a desire to make a public example out of Anthropic for its criticism of the government. Nvidia is reporting hitting the brakes on one of its newest financing strategies. More next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Nvidia lifted the entire market yesterday after a stellar earnings report and forecast. A new report now, though, potentially weighing on shares in the pre-market. The Wall Street Journal saying Nvidia is pausing certain deals in a July financing initiative that offered credit support to AI cloud providers. And this all coming as PIMCO is the latest to say AI debt financing stoking bond yields, and it's too much too fast. Let's discuss it all with Bloomberg senior strategist Neil Campling. Neil, tell us more about this report that suggests that Nvidia has paused some deals over regulatory concerns.
Morning, Bonnie. Yeah, so this report is suggesting that it could bring in some antitrust concerns, because what the original program was, the arrangement announced in July, it gave Nvidia profits in two different ways. First, by selling the chips, as you normally do, but then also by collecting a portion of the revenue when customers rent them out themselves. So you kind of like, if you like, too many fingers in the pies here in terms of the way the program works. So it certainly could be. I think there's probably pushback from some of these customers, to be honest, as well as the regulatory concerns. But it was originally $36 billion of commitments were under these agreements over 6 years. So it is somewhat of a setback for the company.
And it's interesting because the report also mentioning that customers were expressing some concerns, but also that Nvidia employees were telling customers that there are sensitivities around the extent to which Nvidia can dictate how their customers do business. I mean, this is really the first time we've seen Nvidia get concerned about this. Up to now, they've been sort of trying to tie up the market to such an extent that it's difficult not to be an Nvidia customer, right? It's too easy to be an Nvidia customer that you just can't not be one.
Yeah, it's so true. I mean, we have all these other alternative chips being produced, but as far as an actual full-service ecosystem platform is concerned, you need Nvidia. You really do, and that hasn't been displaced yet. So they, in some respect, I suppose they are seen as potentially controlling the market. And I suppose the last thing they want to do is draw any concerns from antitrust side of things. So there's a lot of sensitivities here about just how much Nvidia can dictate how their customers do business.
And shares are lower by about 1% of the pre-market, but we should mention they were up nearly 9% yesterday. So this could just be a little bit of coming off the boil, as it were. Neil, this urging from PIMCO that there's potentially a little too much AI debt coming too quickly to the market, but it's also giving investors some opportunities. It's sort of, it's painting the brush with both sides, if you like, because PIMCO is saying, hey, we don't have a problem with it right now, but it is a little bit of a red flag for the future, no?
It is. I mean, they did say, didn't they, I think in the report about the AI capex is causing indigestion for fixed income markets and fueling the yields. So, and then I've seen other reports that saying that we have to be aware of this big debt financing, because the other thing is that the hyperscalers are expected to have depreciation expenses of over 500 billion by 2030. And that's as much as the operating profits of all 5 hyperscalers combined in 2026. So debt financing is getting costly, and it's sucking up a lot of a lot of attention and demand from other areas of the market.
Neil, what happened with Marvell? We had a big disappointment after earnings. We weren't really anticipating that, were we?
We weren't. I suppose you could argue that Nvidia had set that bar really high because of what happened yesterday, and Marvell, they were positive on the call. The numbers were good, and the guidance was good. However, it's a bit of travel and a ride. The stock is up 160% year to date, so the stock had a massive run, whereas Nvidia actually had lagged a lot of the other AI stocks and enablers into its own print. So there is definitely a bit of positioning here in terms of the way the price action is in early trading.
Yeah, and I suppose the software companies had a massive sell-off since the beginning of the year as well, so that could account for their massive rise after their earnings. All right, Neil, thank you. I also want to mention that Advent and Stripe are said to be abandoning their $50 billion pursuit of PayPal. We didn't get to that, but Neil Campling, thanks for all of that. Coming up, some U.S. firms with close ties to President Trump taking steps to gain favor with Democrats now. More in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. While much of the focus today will be on Fed Chair Kevin Warsh's remarks in Jackson Hole, the resort town in Teton County, Wyoming, is also a symbol of the way wealth transforms a town. Bloomberg Michael McKee reports for Wall Street Week.
The geographic isolation still really affects who we are, our ecosystem, our community, our sense of who we are, but it has much less effect on our economy. So now we have people from around the world who come and live here part-time, full-time. They work from anywhere, so we've really become a hub of remote work.
For decades, it was New York County, which is primarily the island of Manhattan, that led the country in wealth accumulation. But in the early 2000s, Teton County jumped into the lead. That trend has rapidly accelerated in recent years, and New York has tumbled into 4th place since the pandemic. Today, the average per capita income in Teton County is about $500,000 a year.
We're the wealthiest county in the wealthiest country in the history of the world. We also sit at the heart of the greatest intact ecosystem in the lower 48. And if you think about things through the eyes of sustainability, where you have ecological capital, financial capital, and human capital, I don't think there's any place in the world that could compare to here.
When I was younger, basically everybody had cattle ranches. Few dude ranches around, but not a lot of them. And then the hotels started coming in, and tourists started coming in. Everybody that comes to Jackson Hole immediately falls in love with it, wants a piece of it. We want to have them feel part of Jackson Hole when they're here.
And that was Bloomberg's Michael McKee. For more, tune in to tonight's edition of Wall Street Week at 6 p.m. Eastern. Time now for your front page news. And first up, the New York Times with the latest on the flash flood in Nepal. Police there warning more water could rush into the flooded area and urge people to head for safety. The death toll has now risen to at least 469, more than 1,000 people still missing. Next up, the Wall Street Journal reporting some companies with close ties to President Trump are taking steps to gain favor now with Democrats. Some, including Meta and Palantir, are preparing for congressional and even potential criminal investigations if Republicans lose control of the House. The Journal says Meta and the others are writing big checks to Democrats before the midterms. And the Financial Times says U.S. banking regulators are narrowing their enforcement and supervision standards to put greater emphasis on material financial risk. The overhaul part of a wider deregulatory push. Regulators have already scrapped so-called reputational risk from their supervisory framework to prevent what they view as unfair debanking. Coming up, we're going to look ahead to the main event at Jackson Hole. Fed Chair Warsh's speech at 10 a.m. Eastern with Sitara Sundar of JPMorgan Private Bank. That's next. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Awaiting Chair Warsh. Futures wavering, also bonds wavering as investors seek clarity on the Fed chief's outlook and reaction function. A blockbuster day. Nvidia shares at a whopping $442 billion in value in just one session after robust guidance. And the AI boom, though, also raising concerns about debt financing. PIMCO saying it's too much, too fast. Let's take a look at these markets then. We are seeing Nasdaq 100 futures down fractionally, no real movement for S&P futures or Russell 2000 futures. And that Nasdaq move is partially thanks to Nvidia down in the pre-market by about 1%. It rose 9% yesterday, though, so perhaps it's no wonder that we are pulling back just ever so slightly. That said, markets are also not going to do much, at least before this Fed chair speech, which happens in 4.5 hours. In the bond universe, we are also not seeing too much movement. We have the 2-year yield, though, a little elevated on yesterday, 423.20, and the 30-year yield is back above 520 again, but that 10-year yield still pretty well below 470, so pretty calm markets there. One stock, though, that we're keeping an eye on is PayPal. It's down double digits in the pre-market as Advent and Stripe are said to have abandoned their pursuit of the payments company. Bloomberg learning the group had previously offered more than $50 billion for PayPal. Representatives for Advent, Stripe and PayPal all declined to comment. Fed Chair Warsh making his debut Jackson Hole speech later today at the Kansas City Fed Symposium. Chicago Fed President Austin Goolsbee expressing a cautious stance on inflation.
I need evidence that inflation, that this inflation shock is not going to be persistent. And I'm okay with waiting as we're getting that. But if the evidence starts coming back, especially on services, that it's high, it's going the wrong way, we're not making progress, then I'm going to be nervous.
Joining us now is Bloomberg's Simon Kennedy. Simon, we may get some thoughts on inflation today, although it's unlikely unless we have something to hear from the Fed chair, right? He said he's only going to communicate something if he has something to say. What should he have to say today? Does he need to placate the markets in some way?
So he can use the Jackson Hole speech, as his predecessors have done, either to talk about what's coming up or try and put together an intellectual framework to describe how he sees the Fed. And so we might get a taste of both. But the markets are very clear. They really want a kind of a makeover of that July press conference. They appreciate that his views on forward guidance. He doesn't want to spoon feed markets. They should be looking at the economy and the sense of what that's doing rather than looking to the Fed for direction. At the same time, and you use the word, you phrase is reaction function. They want to hear from him how importantly he currently rates the fight between controlling inflation or boosting employment. They want him to describe how he sees the economy as it's evolving. And from that, they then hope to draw their own conclusions on the state of policy and where it's mainly directed. So they certainly want a bit more information and a bit more understanding of how he plans to communicate in a world where he's quite clearly said he has no truck with forward guidance.
Yeah, and Simon, how big is the risk that some of his comments today cause the market to actually reprice quite fundamentally?
Well, it's perhaps not fundamentally, but what you've got at the long end of the yield curve, the 10, 30-year bond yields, they've been pushing higher in part because of confusion about just where the Fed stands, what it might do in September or later in the year regarding rate hikes. Chairman Warsh will be saying, well, look at the economy and draw your own conclusions. And they're saying that's fine, but we still don't really know how you think about the economy, how you think about monetary policy. So they're looking for that. And certainly there's that risk of movement in either direction. We saw Scott Bessent at the Treasury intervene to keep yields down last week. That could be tested again, or Kevin Warsh should come to his aid and be talking. If he comes out and is very hawkish and anti-inflationary, then that might push yields down a little bit.
Simon, would Fed Chair Warsh have changed what he was going to say after that intervention?
Perhaps. I think he said himself he wasn't quite sure whether he was going to use his speech to kind of put his outlook for immediate Fed policy, or his prepare his shop front for how he plans to run the Fed over coming years. So it'll probably be a little bit of blend of kind of vision, both for the Fed and maybe a little bit of commentary on the economy. But the fact we don't know, the fact we're even having this kind of conversation, proves that the markets don't necessarily have a great handle on what he plans to say.
No, and there is always that possibility that he just talks about financial innovation, as is the theme for this conference this year. Simon, thank you so much. That is Bloomberg's Simon Kennedy. Joining us at the desk is Sitara Sundar of JPMorgan Private Bank. Sitara, thanks so much for joining. What would markets be satisfied with today? What's the bare minimum that they really demand from the Fed chair at this point?
I think clarity around reaction. We don't expect a lot of near-term clarity in terms of what the next move is going to be, in terms of what's going to happen in September. But I think longer-term clarity around reaction function and credibility towards getting inflation under control would be two things that I think the market would react positively to.
If he says nothing, if he talks about something completely irrelevant except to the broader picture or the broader Fed sort of redoing, does this market reprice in that scenario, or does it just go home because it's late in August and we've had a long summer and there's 1 week left in August and, yields can just take care of themselves?
Look, I think that in general, what we think is going to be dictating markets over the long term. I think we get fixated on what's going to happen from a day-to-day basis, but when we take a step back, and I think this week was a perfect example of it, what the market is focused on is getting clarity around inflation and whether inflation is going to get unanchored or whether we're going to be in a range-bound environment, what that subsequently means for rate volatility and really what that means for the long end, not just in terms of getting inflation under control, but what's happening with the deficit. We expect the long end to be range-bound, and any clarity that we get on that, great. If not, I still think that at the end of the day, markets are going to, and rates are going to reprice in the long end, depending on inflation expectations, fiscal deficit, and longer-term growth expectations. One. The second point of it is trying to get clarity on what the next phase of artificial intelligence is going to be and refocusing on the fundamentals. Because from a rate perspective and from a core fixed income perspective, carry it still looks pretty good, right? And I think that you're still getting a pretty decent yield when it comes to like the middle and the belly of the curve. So it still makes sense to invest in that area. But then for us, what we're really focused on is trying to understand from a longer-term perspective, whether the earnings growth is there, which it has been, and what that means for equity markets.
Yeah, I mean, it does feel like a market that's trying to grasp what the next narrative is, right?
Correct.
So for a moment in the bond market, it looked like the deficit was going to be the next narrative, and that has retreated. When does that actually become a real issue for this bond market?
Look, I think that I don't actually know that it's retreated, because I think that there's part of what's happening in terms of what we're seeing in the long end volatility. I don't know that the long end would be as volatile as it is if we hadn't had the kind of geopolitical tension that we've seen so far this year. And what I mean by that in terms of what that means for the deficit, part of the reason why the long end has been a little bit more volatile is also due to the amount of expected defense spending and the amount of boost to spending as it relates to artificial intelligence, the amount of issuance that's coming to the market. The market is trying to digest that. But for us, what that means from a portfolio perspective is that while the 60-40 makes sense, with an expectation that rate volatility is likely going to be higher because inflation volatility is going to be higher, or we have to at some point in time reckon with what's going to happen with the fiscal deficit, adding diversifiers within your portfolio that are either less correlated, like hedge funds, really within the relative value and macro space, which have had a really strong year so far this year and have actually outperformed, Bloomberg Ag, whether it's U.S. or global, or even adding, kind of inflation resilient income when it comes to core infrastructure and core real estate. That's where we're leaning into. What is happening in the market, digesting that, and what that means for portfolios.
How concerned are you that with the midterms coming and this pushback on data center build out, that it will be difficult for the market to keep digesting these bonds that are constantly coming to the market? Even PIMCO is warning it's a lot to digest.
Well, there's a constant tension as to what the bond market is going to do and whether or not that supply is going to be absorbed. But taking a step back, at the end of the day, we are still in an environment in which we've kind of moved from we don't have enough chips to we don't have enough compute and we don't have enough power. And at this point in time, what we know to be true is that the infrastructure that needs to be built when it comes to artificial intelligence and the power bottlenecks that we might already end up in a supply-demand imbalance on the power side in the U.S. by the end of 2030, the need to invest in this space is paramount. But what we've seen is a shift on the financing side from it getting funded from cash flow to it getting funded from a mix of the capital stack, whether it's equity, whether it's investment grade debt, or whether it's even debt that is getting financed within the private markets. We think the market is going to be able to absorb it over the long run, but there will be pits of volatility along the way.
So how complicated are the contracts getting right now? And where are companies finding loopholes that they can, take advantage of? And where are the funders looking to see how they can get most out of these products?
I think at the end of the day, like if I was someone who was going to be trying to build a data center or build a power plant, you would want to, whether it's coming from financing from the public market or whether it's coming from financing from the private market, you want to get the terms that make the most sense. And from an investor perspective, you want to get compensated for the risk that you're taking. It's why you're starting to see some of the complexity that's coming in the financing market. But I think what an equally interesting point is that we have like two different cycles that are playing out within artificial intelligence right now. We're kind of middle innings as it relates to the financing build out and also the infrastructure build out, but we're early innings on the monetization front and what that next phase of integration and ROI of the application layer of AI. So I know we're very fixated on the infrastructure and the amount of supply that's coming into market. I'm less concerned on that supply being put to use and creating a lot of long-term volatility. My focus at this point in time is you want to make sure that infrastructure is being used for something. So we're really focusing on the ROI and the monetization layer, because at the end of the day, that's probably what is going to break the dam.
Is there going to be an earnings season at some point soon then, when we hear a bunch of companies in all sorts of different industries come out and talk about this and talk about how much more efficient their business has gotten and how much more they're seeing productivity increase in their business because of AI?
I think so. I think this past earnings season, we actually started to see real breadth outside of just the mega cap players and mega cap tech players. For the most part, mega cap tech has still been lifting the earnings growth and carrying the burden. However, for the first time in quite a bit of time, the median S&P 500 company grew 14%. And part of that is due to the margin expansion that we've seen in terms of some of these companies actually integrating artificial intelligence into their day-to-day businesses. And that's positive.
We were just talking a moment ago about how we bookended the summer, right? We have Jackson Hole coming at the end of the summer, but at the beginning of the summer, there was the SpaceX IPO, right? Did capital markets get healthier during this time process? Where we saw SpaceX, and not just SpaceX, but a lot of chatter about Anthropic coming to market and OpenAI and so on. Are capital markets healthier, you think, after that?
I think that what we could see this year is the strongest period of capital market issuance, whether it's IPOs, and a lot of that is concentrated in the mega IPOs, or even M&A oriented activity that we've seen in the past 10 years. And I think that's really meaningful in terms of what that means for not even just equity market sentiment and even some of the bigger banks and capital market oriented banks within financials, but that's really positive in terms of what the distribution outlook could look like for venture capital and growth and for private equity as well. One of the biggest pushbacks that we get on investing within private equity and VC and growth today is that the distributions haven't come over the past 5+ years. And the beauty of the strength that we're seeing in capital markets today is that could flip within the next few years.
Amazing. Sitara, thank you so much for coming and joining us this morning, this Wyoming morning. Sitara Sundar of JPMorgan Private Bank. Now to all the top stories trending on the terminal this morning. Iran's foreign minister saying resuming diplomacy with the US isn't impossible. The remarks come after what he described as creative discussions with Qatar. The relatively positive comments come despite the launch this week of a US campaign to cripple Iran's economy. The top US commander for the Middle East says US forces have cleared Iranian mines from the Strait of Hormuz. Admiral Brad Cooper released a video that included a detailed map and a diagram after US allies expressed concerns about the claim.
We have successfully cleared sea mines in the Strait's international shipping lanes that were laid months ago by Iran's Islamic Revolutionary Guard Corps. Bottom line, today, international shipping lanes are open and momentum is building.
Citadel Securities posted a record $7.3 billion in second quarter trading revenue. According to sources, that's more than triple the level from a year ago. Net income also climbed more than 250% to $3.3 billion. Performance got a boost from the firm's expansion into equity block trades for hedge funds, asset managers, and pensions. Coming up, Washington growing its influence over Caracas. The two nations in discussions and considering, apparently, Venezuela's exit from OPEC. More next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Venezuela is said to be considering pulling out of OPEC in conversation with the U.S. This comes as Washington's influence over Caracas grows, with the two nations also discussing the U.S. may be taking a major stake in some Venezuelan oil fields. Joining us from Washington is Kate Ackley of Bloomberg Government. So Venezuela is back in the picture. Kate, what actually is under discussion here that we know?
Well, this would be a big change for Venezuela, obviously, to leave that organization of the petroleum exporting countries and shifting alignment more towards the United States. Of course, this is all sort of fallout from that January invasion, basically, where the U.S. went and grabbed the longtime leader and sort of took over or restructured the government, if you will, in Venezuela. So this has all sort of been building from that. And obviously, President Trump has talked a lot about wanting to have more control over the oil fields there and the oil production there. And he has encouraged U.S. companies to go in there. We've seen even, some D.C. lobbying firms set up operation in Venezuela as a response to this, as companies try to navigate, the sort of choppy waters there in Venezuela.
Yeah, it's definitely proceeding apace, this involvement, and we'll see if Venezuela actually officially pulls out of OPEC. What's the state of play right now on US-Canada relations? It seems to have deteriorated quite substantially yesterday.
Well, yes. I mean, this week has been, and really the past 7 days since those trade talks collapsed last Friday night, has, set off all kinds of problems for various industries, including many U.S. companies, aluminum producers. They've been really, calling on the two countries to come back to the table. It doesn't seem like those things are going well. You have dairy, you have auto. It just really, I talked with people this week from the distilled spirits industry. It affects trade between the U.S. and the U.S. and Canada affects so many different industries. It's our biggest trading partner. So these industries are calling on the U.S. and Canada to resume talks, to get those trade talks going again. And instead, it seems like it's become a bigger problem with more retaliation from, tariffs to obviously renaming Lake Ontario by President Trump. So just not going where a lot of these industries wanted. And many will be going to the U.S., trade representative's office, to the White House saying we will need carve-outs to some of these tariffs that would be imposed as a workaround, because it's very hard for some of these industries to deal with these tariffs.
I mean, in a certain sense, he's baiting Doug Ford, right? And we know that Doug Ford can be a little bit responsive. So way back, remember, Doug Ford had to sort of reverse his stance and almost apologize to the United States because he got quite angry at President Trump. This time around, with the trolling and so on, he seems to be a little calmer, a little more easy to get on with. But at some point, you know, Doug Ford is going to say something to President Trump, isn't he?
Well, maybe this is sort of a negotiating tactic. You know, I talk to people all the time who are lobbying the administration, working with the Trump administration, working with Congress, and many will say a lot of these kinds of moves are all about, you know, the art of the deal, if you will. So we'll see how this all turns out. We'll be watching these debates for sure.
Kate, where do we stand on the mail-in ballots?
Well, this is another, you know, example of kind of the courts playing a fairly big role in our upcoming midterm elections. I mean, we've seen the courts playing a big role in the you know, drawing the lines, the congressional district lines, all this redistricting fight that's been going on. And now, you know, President Trump is trying to put restrictions on voting by mail, as, you know, the midterm elections are just nearly upon us. In some states, I think North Carolina is one, are already getting ready to send, you know, ballots by mail to voters, you know, next month, very soon, in the coming days. Basically, what happened was a federal judge in Boston has temporarily blocked the U.S. Postal Service from sort of implementing some of this control over the mail ballots that President Trump wants. And it basically, you know, what our sources are saying is that this is going to tee up another fight, potentially going to the U.S. Supreme Court. And, you know, again, this is like the time is running out for the midterm elections. They're fastly ticking and approaching.
Yeah, exactly. We talk about next week being the last week in August, and then we are right into midterm season. Kate Ackley of Bloomberg Government, thank you so much for joining. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Well, the one event markets will be watching. Fed Chair Kevin Warsh's first speech at the Kansas City Fed Jackson Hole, Wyoming Economic Symposium. Now that's at 10 a.m. New York time, but we're going to have full coverage beginning at 9 a.m. An all-star lineup, including Cleveland Fed's Beth Hammock, former Kansas City Fed President Esther George, and the BOE's Catherine Mann, also former Fed Vice Chair Rich Clarida, all joining on that special. Few stocks moving in the pre-market, all lower. PayPal down after Advent and Stripe have said to be abandoning their $50 billion bid. Marvell beat, but we're back to the old game of, well, you rose a lot this year, we're going to sell you off. Autodesk also that underwhelmed.